Hello friends, 11th July 2023 is marked as the 50th GST Council meeting and is a red letter day in itself. To mark such date, wholesale changes have been brought into the GST law, which is a mini budget in itself when it comes to GST law. So, we'll discuss about the major changes which have been brought in through this GST Council meeting. First is there has been a significant development in terms of establishment of GST Appellate Tribunal, which we all have been waiting for quite some time. Now, Finance Act 2023 had provided some changes in the provisions for the constitution of the Appellate Tribunal. It also required the appointment of the Search cum Selection Committee. GST Council meeting has proposed one of the members which is to be nominated by the GST Council meeting as the Chief Secretary of Maharashtra for the Search cum Selection Committee. Also, the rules which are supposed to be coming in for the Appellate Tribunal would also be expected to be notified with effect from 1st of August 2023, which is again going to be a landmark in itself. We are hoping that once this is done, the establishment of the tribunal also happens sooner rather than later. The Search cum Selection Committee would be working towards making sure that they can appoint the relevant members, and when the members are appointed, phase-wise the state benches would be established. So it may not happen that on one single date all the benches are coming in together. It may happen in a phase-wise manner. So we are hopeful that this would happen sooner rather than later. Next, cross-charge and ISD concept have been both very litigative in terms of the GST law. If someone has done cross-charge, the department is asking as to why have you done cross-charge. If someone has not done it, the department is asking as to why you haven't done it. So, also what people have done is they have been using the concept of ISD and cross-charge interchangeably. Some have not used the concept of ISD at all and only used cross-charge. So, for the time being, because of the lack of clarity, the GST Council has proposed that a circular would be issued wherein ISD would not be considered as mandatory for the past periods, wherever any input services have been received for common services. So in case of any common services, input services which is required to be distributed to everyone, that is not compulsory at least for the past period through ISD mechanism, but they would be clarifying as to how the concept of ISD and cross-charge would be done and how these internally generated services between two different distinct persons or different GSTNs within the same PAN are required to raise an invoice amongst each other. Also, prospectively, it would be provided that there would be some amendments in the GST law to make the ISD concept compulsory. So ISD is right now not compulsory, it would be made compulsory in the future. Also, in which cases ISD is to be done, in which cases cross-charge is to be done, can they be used interchangeably, are all the clarifications that are supposed to come in through the means of a circular which we are all dearly waiting for. Because a lot of people have and a lot of corporates have taken different stands, which would be probably more clear after this circular gets notified. Next, for warranty, there has been again a great deal of confusion because the department is asking the assessee to either reverse their credit because they are saying that you are giving something free of cost, or they are saying you need to pay output taxes because you are making supply without consideration when it comes to manufacturers. In a very welcome move, it has been stated that GST Council has proposed that no GST would be charged whenever any parts are replaced free of cost, or rather they are replaced as part of warranty. Mind you, the manufacturer already recovers the portion of the cost of the replaced part whenever he is selling the original product as part of warranty. So the product itself, if it is under warranty, the cost of replacement is already embedded within that. That is already recovered. So this is not something which is being done free of cost. So There is no tax which is required to be separately charged because during the selling of the original product, the manufacturer had recovered the cost and had paid GST on it. Also, there is no free disposal of goods. That is why there is no ITC reversal also involved, because on these parts the ITC is fully available, and since the price at which the original goods were sold was already including it, the parts ITC would also be available completely, right? However, having said it, as to how the service centers would be coming into picture, when the service centers are buying from the manufacturers and thereafter selling to the customers, as to how this would be happening, as of now we are waiting to see if this circular also covers those aspects. Next, we all know that from 1st January 2022, GSTR 2B 3B matching has become compulsory. So 100% matching has become compulsory. That means unless and until the invoice appears in my GSTR 2B, I cannot take the credit. As a consequence to it, it has been provided that refund of ITC would be only allowed once the matching is done between 2B and 3B. Till date, as long as the invoice was appearing in my GSTR 2A of any period, the refund was allowed, subject to the fact that I had taken the credit in the current period. However, from 1st Jan 22, since ITC is only allowed once it appears in 2B, it has been stated that only and only if ITC appears in my 2B of the past period or of the current period, the refund would be eligible. If ITC appears in GSTR 2B of the subsequent period, in that case the refund amount would not be eligible, which according to me is a very regressive step, and it is going to be challenged definitely in a lot of forums, because there is no provision as per law, legal provision, which requires me to not get the refund only because ITC is appearing at a later date in my 2B. So this is going to be challenged for sure. Having said this, for the time being, the department would be following this particular circular, wherein ITC they would be only allowing only if it appears in 2B of the current or previous periods. So in other words, the ITC would be completely lost if it is appearing in the subsequent period, which is a very big regressive step. So at least it could have been allowed at a later date, but it may not be allowable also at a later date. Next, value of export turnover for refund purposes. Now, export turnover, it has been clarified with effect from 5th July 22 that the value of export turnover would be lower of the shipping bill FOB value and the value declared in the tax invoice. So it will be lower of the two. Now the adjusted total turnover would also be the same value which is there in the export turnover. So it would be the same value which is currently there in my export turnover also. So denominator and numerator, the export turnover value would be the same. Now this is again a very welcome move. It had been notified with effect from 1st July 17 that interest would be applicable on ITC reversal only and only if ITC stands both availed and utilized. So ITC would be both availed and utilized, then only the interest would be applicable. This is provided under Rule 88B, read with section 50 subsection 3. Now what happens is, if I have balance in, let's say, one head, let's say SGST, whereas I need to make a reversal under CGST, the department would always ask me to pay the interest amount. Why? Because they would say that the balance is there in one head, but the reversal you are doing in any other head, so you have to pay interest because we will only allow setting off of ITC balance from the same head. But do you think it is the fault of the assessee that the balance is there in one head? IGST needs to be completely exhausted, then CNS can be utilized. So if IGST does not contain a balance, is it the fault of the assessee? No, it is because the GST rules have been framed in that way. So it has been stated, as long as I have balance in the electronic credit ledger in any of the heads, I need to accumulate all the heads, and if the balance is there in any of the heads, so once I accumulate the balance, whatever reversal if I am making, if the reversal is lesser than that, interest is not applicable. If the reversal is more than that, the reversal would be interest would be applicable only on the differential portion, right? So we need to combine the electronic credit ledger balance of all the three heads and thereafter compare with the ITC reversal. If it is below, the reversal is below the electronic credit ledger balance, interest would not be involved. Now, we know that up to 8 October 19, there was no 2A3B reconciliation which was mandatory. Right? 2A3B reconciliation was not mandatory. But the only condition was that the tax should have been paid to the government. But from 9th October, Rule 36(4) has been notified, wherein it has been stated, ITC which is eligible as per my 2A, I could take 120% of that ITC, which later got reduced to 110%, thereafter to 105%. For 17-18 and 18-19, it was clarified that even if the invoice is not appearing in my 2A or 2B, but the supplier has made the payment of taxes and we have all the relevant conditions that we have satisfied in terms of having the invoice, that we have received the goods or services, the tax has been paid to the government. If all of this is satisfied, I can still take the ITC. For condition that the tax has been paid to the government, it has been provided under Circular 183 that the recipient can take a declaration from the supplier or his CA that the supply had actually been made and tax has been paid to the government. If this declaration is available, in that case we can get the ITC, right? So that is not a problem, right? But we need to remember this. The issue is that for the future periods after 18-19, what happens? From 1st Jan 22, it's clear that I cannot take ITC if it does not appear in my 2A or 2B. But before that date, it has been now stated a circular would be issued, wherein similar process of verification would be provided, wherein maybe the declaration from the supplier would be sufficient, as long as the invoice, as long as the ITC is within the threshold limit of 120, 110 or 105%. In such cases, I can still take the ITC as long as I get the declaration from the supplier that he has paid the taxes and he has actually made this supply to me. Now, we know that DRC 01B is a new form which has been prescribed on the GST website, wherein any difference between GSTR 1 and 3B beyond the prescribed threshold, it is expected that I would be receiving a notice for which I have to give an explanation. Without this explanation, the department may initiate direct recovery against me. Now it has been proposed that a new rule would be inserted and a new form would be inserted, which is DRC 01D, which would provide the mechanism of recovery, direct recovery, if there is a mismatch between 1 and 3B. Next, this is a very big step which they have taken. GSTR 2B 3B mismatch. That means department is going to look at my GSTR 2B and 3B. I need to be very accurate now in terms of the new return filing mechanism, wherein I should show my ITC as per 2B. I need to make my temporary reversals. Whichever invoice is not appearing in my books in the current date, I reverse that ITC. The next month, once the invoice appears in my books, I would take that ITC and show it under 4D1, which is invoice for a previous tax period for which ITC is taken in the current period. So the entire mechanism of GSTR 3B, the new GSTR 3B prescribed last year, has to be followed. If that is not followed and there is a significant difference between 2B and 3B, there is a new rule which is Rule 88D and a new form which is DRC 01C, which is expected to come in, and within this form I am required to explain to the department as to why this difference is arising, or I need to take a remedial action. We don't know what happens if this is not satisfactorily available to the department, if this explanation is not satisfactory to the department. We don't know what action they would be taking, but I'm sure this is going to culminate in the future by means of automatic recovery provisions also, similar to 1-3B mismatch. So we have to be very careful to ensure that we are following the correct process now of filing our GST 3B by means of matching through 2B. Now, GTAs had to file a declaration before 15th of March at the beginning of the year if they wanted to opt for forward charge in the next year. Otherwise, they were deemed to be under RCM. A lot of GTAs, they had already exercised the option last year. For them to file an option every year becomes a bit of a challenge. So, it has been said that once the GTA has exercised the option for forward charge, till they withdraw that option, the forward charge option will continue. So, this is a welcome move. The GTAs don't have to file this form every year if they want to continue under forward charge. Also, this option can be now exercised between 1st January to 31st March of the preceding year. So, there is a 3-month window wherein I can go from forward charge to reverse charge if I want. Next, service provided by director to the company. Normally, service provided by director to the company if under employment is not taxable. If it is not under employment, that means it is provided by a non-executive director to the company. In that case, it is taxable under RCM. But a lot of directors are providing services beyond their role of directorship. Like they are providing renting of immovable property. So they are providing their own immovable property on rent to the company. In such cases, it is expected that there is no RCM that should be applicable. But the department was issuing notices stating that any services by director of the company would be under RCM. But this is a welcome step wherein the department has given a very good explanation that this would not be applicable. RCM would not be applicable if the services are provided in the personal capacity by the director other than in the course of directorship. Next, food and beverages served in cinema halls. As of now, the rate is higher. Now it has been stated that the rate would be 5% without ITC, so that it comes in on the same lines as that of restaurants. So even if now you have food and beverages either in cinema halls or the restaurants, the rate of taxes and the taxability would remain the same. Next, casino race courses on online gaming. I think this has been something which has been doing the rounds for quite a long time. A group of ministers had been earlier appointed. The 47 GST Council meeting, a few recommendations were placed. Thereafter, it went back to the group of ministers. Finally, it came back to the GST Council, and the GST Council had to take a decision. It has been decided by them that for online gaming, irrespective of whether it is game of skill or game of chance, GST would be now applicable. It may be noted that in recent judgment of Gamescraft Technologies by Karnataka High Court, it was stated that in case of games of skill like Rummy, there is no lottery betting or gambling involved. It is nothing but an actionable claim on which GST cannot be imposed. But now there is an amendment which is proposed to be brought in the law, wherein online gaming and horse racing would now be treated to be taxable actionable claims. So on these, tax would be applicable at the rate of 28%. So law would be amended. Thereafter, tax would be applicable at the rate of 28%. Also, the value on which it would be applicable would be the face value of the chips purchased, which is a very huge amount. So if I'm buying chips of 100 rupees and if I'm taking back, let's say 20 rupees, I've lost 80 rupees there. So even if I have lost that amount, I have to pay GST or 28% on 100 rupees. So 28 rupees would go straight out of my pocket the moment I buy the chips, which is, I don't know how the industry would take it. This would be an extremely regressive step because this industry might suffer a lot. I don't know whether this industry might have a parallel economy which may start because people may start avoiding taxes because of this. Because ultimately the bookmaker has only earned the amount, the organizers have only earned the amount which is retained by them. But having to pay the entire taxes on the chips purchased, I don't know how many people would be now wanting to do this, because if I'm having a game of 50-50 chance, in that case, if 30 rupees goes out or 28 rupees goes out of my pocket right on the first date, irrespective of the outcome of the game. So in that case, the chances of me getting back from that game itself gets reduced significantly. So we'll have to see how this industry takes this particular amendment. Manual filing of appeals. So Tran 1 and Tran 2 revision had been allowed in between from 1st October 2022 to 30th November 2023 as a result of the Supreme Court judgment in case of Philco Trade Center. Also, it was stated that department would be making a verification of a transitional credit. Then only that transitional credit would be allowed to be taken by you, right? So that verification, after it has been completed, it may happen that that verification has resulted in an adverse decision and the assessee is not satisfied. As of now, there is no mechanism of filing of appeals in such cases. And the department in certain cases have been rejecting appeals because they are saying that we will not admit manual appeals and the online appeal option is not available. So it has been stated that there will be a special procedure prescribed for manual filing of appeals against such orders, right? Also, under certain other circumstances where online appeal filing is not allowable, manual appeal filing can be done. Next, extension of amnesty scheme. So Council has recommended that amnesty scheme, which was for non-filers of GSTR 4, 9, GSTR 10, which was notified on 31st March 23. These people can now opt for the amnesty scheme up to 31st August 23. So the late fees would be in accordance with the amnesty scheme which was provided. So even the revocation of cancellation, deemed withdrawal of assessment order upon filing, all of this would still be applicable till 31st August 23. Next, now it has been stated that in case of registration, there is no requirement of physical verification only in the presence of the applicant. So even if the applicant is not present, the department can do physical verification before granting a registration. Also, physical verification can be mandated in case of high risk cases. Even if Aadhaar has been authenticated, still physical verification may be mandatory. Also, Gujarat had earlier implemented risk-based biometric-based Aadhaar authentication. That means a biometric-based Aadhaar authentication would be compulsory in certain cases. So, a person has to physically give his biometric before applying for GST registration. Having seen the success of this in Gujarat, Puducherry is now implementing this. Thereafter, Andhra Pradesh is also saying that thereafter they are ready to also implement this. So we might see risk-based, biometric-based Aadhaar authentication coming in future in all the states in the future if I want to opt for new registration. With this, I would like to thank every one of you for giving me a very patient hearing. I hope you have liked this video. Thank you.